Silver has all of the characteristics gold has, right? It's a store of value. It's money. It has its monetary value. And so the things that affect the gold price are also going to affect the silver price. When you look at it in a macro basis, the silver market is about a 1.2 billion ounce market of demand, and it's about a billion ounce market of supply. So you have a deficit between the supply demand, so it's unlike gold, where you actually have these utilizations of silver that, in fact, 55% of all the demand for silver is in industrial application. So quite a bit different in that sense from gold.
The annual demand for silver is approximately 1.2 billion ounces, while the supply is around 1 billion ounces, creating a supply deficit. Unlike gold, a significant portion of silver demands about 55%, comes from industrial applications, making its market dynamics different from those of gold. The recent significant profit-taking in gold had an outsized effect on silver prices. However, volatility in the market is starting to calm down, with growing expectations that the Federal Reserve will cut interest rates by the end of the quarter. Meanwhile, the silver above ground is categorized into two main types of inventories. First, there are reported inventories, which include silver listed on exchanges like COMEX, LBMA, or the Shanghai Exchange, totaling around 1.7 billion ounces. Second, there are unreported inventories, which consist of approximately 3.3 billion ounces of silver in bullion or coin form that isn't officially documented. Despite increasing demand, silver inventories are facing depletion. The London Bullion Market Association, LBMA vaults, have seen a significant decline in silver holdings, dropping to less than a billion ounces, which is a 15.4% decrease from the previous year. This reduction in reported inventories has raised concerns about the availability of silver to meet industrial needs. Phillips, president and CEO of Hecla Mining Company, believes that the growing recognition of silver's utility and the increasing deficit will shift market perceptions and drive higher silver prices. With the current silver price ratio around 75, Baker expects this to change as awareness grows. He advises investors to hold silver physically or through derivatives, as both are likely to benefit. The silver market is small, with about a billion ounces of supply valued at approximately $30 billion. Silver is increasingly used in photovoltaics, requiring about 400,000 ounces to produce 1 gigawatt of solar capacity, with 500 gigawatts of capacity expected to be installed. This means 200 million ounces of silver will be used in solar alone, representing roughly 20% of the 1.2 billion ounce market. This is a significant increase from less than 8% in previous years, highlighting the growing demand in this sector. As we present clips from the video, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell to be instantly notified every time we upload a video. Thanks for the support, and enjoy the video.
It comes from above ground inventories, and you got two categories. You have reported inventories, and by inventories, I'm talking about silver that is on the COMEX or the LBMA or the Shanghai, and that's about 1.7 billion ounces. Mm-hmm. And then you have about another 3.3 billion ounces that is unreported silver that is sitting in bullion form or coin form. There's going to be a realization of the real use for silver and this growing deficit. And so what you'll see is that ratio, the perception of where that ratio should be will change. And it will, currently we're at about 75. You have people talk about it in terms of, for whatever reason, maybe they talk about it in terms of 80, maybe they talk about it in terms of 60, but whatever.
13.
Yeah, well, and you can go to 16 to 1. That's sort of the historic.
Was that 16 or 13? I keep confusing the number.
It was Alexander Hamilton, 16 to 1.
Yeah.
So where will it go? I don't know, but I certainly think the perception of where it should be will change with this deficit. When you say you've got to take a billion ounces out of inventory and out of people's hands, you're going to have a higher silver gold ratio. What I would encourage is people that need to be long silver, they can be long physical or they can be long in the derivative markets. And that's fine. It will ultimately end up having the same result, which is a higher silver price. The silver market's so small. You think about a billion ounces of silver demand, or silver supply, and you think about the price at $30, you're talking about $30 billion. That is infinitesimal. So it is such a small market. And there's so little knowledge about the market, right? There is so much misinformation, and there's so little recognition of what's physically happening with silver going into particularly photovoltaics. You think about it takes about 400,000 ounces to produce 1 gigawatt of installed capacity of solar. So you think about that, we're now at call it 500 gigawatts of capacity that's going to be installed. So that's 200 million ounces that's going just to solar. So out of a 1.2 billion ounce market. So you're getting to the point where you're talking about 20% of the total market is going into solar. And if you go back in time, it was less than 8%.
Despite different data sources, the consensus is that silver demand is growing rapidly. The silver needed per gigawatt of solar capacity might rise from 400,000 to 600,000 ounces. However, mining companies produce only 800 million ounces annually in a 1.2 billion ounce market, insufficient to meet demand. The majority of silver production comes from lead, zinc, and copper mining, but it's extracted as a concentrate that needs to be smelted, making it difficult for companies to control inventory. Unlike producers of doré bars, most companies can't hold back inventory and must deliver it to smelters. The goal is to educate people about the silver market, providing real information to inform decisions, which can impact the price of silver by reducing short selling and increasing understanding of the market deficit. However, global silver deficit is anticipated to increase by 17%, reaching 215.3 million ounces in 2024. This rise is attributed to a 2% growth in demand primarily driven by robust industrial consumption, coupled with a 1% decline in total supply, as reported by the Silver Institute Industry Association. Let's get back to the interview.
People are looking at data, and they're getting different sources of data, and they've coming to different conclusions. But we're all coming to the same conclusion, which is it is growing at an extraordinary rate. And with the new technologies that are being used with solar, it is the amount of silver that you're going to need per gigawatt is actually likely to go up. I've said 400,000 ounces. With this new technology that's being deployed, it might end up being closer to 600,000 ounces. So that makes a huge difference. But let's just wait and see how much of this actually gets deployed. I mean, that is speculation as to where we really are on that.
No.
Think about the supply side of silver, and number one, that the mining companies only produce 800 million ounces in a 1.2 billion ounce market. So no, we're not going to be able to control the supply. We can't even produce enough silver to meet the demand. So you got a big component that's coming out of these above ground inventories. That's number one. Number two, if you think about the mining companies that are actually doing this, or the mines, 2/3 of those mines are actually not silver mines. They're actually some other metal, lead, zinc, copper, gold, and it's a byproduct, and it's a relatively small byproduct. So there's actually very little interest or incentive for those companies and those mines to really focus on silver. So it's a very, very small group of people, small group of mines that have this silver focus. The production primarily comes from lead, zinc, copper. And when it comes from those metals, it's not coming out in a form that you can actually hold back. It is a concentrate that has to go to a smelter, and then the outturn from that smelter actually produces the silver, and it's way down the line. So the company really has no control over that inventory, and they've got to deliver the concentrate. They don't have a place to store this great big pile of concentrate. They've got to actually get it to the smelters. So I can appreciate those companies that produce a doré bar that only has to be refined. The silver market, all it's really designed to do is to give people real information, real knowledge, so that they can make informed decisions. And we believe That if you do that and you're doing it to the right audience, it will make a fundamental difference in the price of silver, because people aren't going to want to be short. They're going to start to understand this real deficit that's occurring.
Phillips, what's next for you?
I'm not sure. I'm going to stay involved with the Silver Institute through the executive committee. But what I do know is that I will continue to be in the mining industry more generally.
According to Silver Institute, structural market deficit is anticipated to continue in 2024, marking the fourth consecutive year of such a deficit. This ongoing shortfall is due to supply challenges, including disruptions in mine production and lower recycling rates. The dynamics of the silver market are poised to drive prices higher. Investors and market participants need to stay informed and consider the implications of these trends on their investment strategies. What strategies does you recommend for silver investors in current market scenario? What are your thoughts on silver supply deficit? Let us know in the comments below. For more content like this, don't forget to subscribe to our channel, hit the notification bell, and explore our other videos. Thanks for tuning in.